Hey everybody, this is Jim at SP500chart.com. It is 4:20 on August 11th, 2014. And before we take a look at the chart, just need to remind you, as always, sorry about that. The website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a quick look. Well, clearly we got some follow-through buying today. And then we hit resistance at about, call it 1945. Interesting to note that level was also resistance to a small degree back on July 31st and to a larger degree on August 4th. So, mark this line. The S&P needs to get over this line, obviously, if we're going to get up to where we would expect to re-challenge at least this line, and quite likely even this one. The timing, I can't really tell you that. Sometimes you just have to be patient and let these things work out. But one thing I do want to point out, and I think you probably are reading my mind, that if this line is resistance and we get out over it without setting a new low, then we would be looking at yet another in a long line of inverted head and shoulders patterns. I'm not calling that yet because until it finishes forming and breaks out, that's just a total piece of speculation. But we do have a nearly, not perfectly, but a nearly perfect horizontal line representing resistance. And like I said, if we get a little bit more of a dip over here than break out over this, then we measure a target of about 1985. You will remember 1985 was the upper resistance line in what we thought was possibly a consolidation pattern, okay, where here we noodled around a bit. We knew we had resistance at 1985. We got over it for a few days, but then we came back into that pattern. Then it broke down to the downside. So if we were to end up, and I'm not saying we are yet, but if we were to end up with an inverted head and shoulders pattern, the target of this pattern would project a move to test this line of resistance. So I think that's interesting. As far as things looking, how they look on a 5-minute chart, well, you know, I mean, you go straight from 1906 to 1945. You expect at some point along the line you're going to hit a little snag, and it looks like indeed there is a little resistance here. Just for jollies, let's put a trend line across these little three tops, just in case we develop some kind of pattern where this line makes sense. But right now, it would not in the least surprise me if we were to sell off a little bit more this week. And if we do and then show a sign of turning back up without violating this low down here at about 1905, let's say we get down to into around 1920, that would be understandable, or even 1930. All I'm saying is some kind of dip here would not be weird. Wouldn't that be interesting that we get another inverted head and shoulders? Again, I'm speculating, highly speculative. I can tell you that I would expect a back test on some of these broken support lines. This one and possibly even this one up here. So if this does flesh out into an inverted head and shoulders pattern and we get a breakout, then I would say we should do even better than that. We should be making 1985. So for right now, I think the safest thing to do is to still keep an eye on our support lines. This is important here, this red line, and as long as we stay above that, then a renewed rally to get back up into the upper 1900s would likely be in the cards. So let's see what happens with the rest of this week. See if we get this little pattern right here. So let's keep our eyes on it. Thanks for watching. Thanks for your support. Take care.